This is episode 178 of the Andrew Hines Real Estate Investing Podcast. Welcome to episode 178 of the Andrew Hines Real Estate Investing Podcast. Today I have Mark Loeffler back on the show. He's been on twice before. Mark is another guest that's just a wealth of knowledge. He's very in tune with the markets and what's going on economically. We had a really good chat about that today, as well as what Mark's doing out in Edmonton. So Mark's been a very outspoken Edmonton investor for the past year or so, picking up a lot of multifamily starting at 15 units, and now he's looking at a 90-unit building. We went through some pretty awesome numbers, some pretty awesome cash flow and strategy as far as where he looks to find properties and how he structures his business and systems. So it's always a very helpful and insightful discussion when I talk to Mark, and today's discussion was no exception. I'm confident you're going to get a lot out of this. As always, just want to ask you to quickly take a moment and rate and review the podcast on Apple Podcasts. 5 stars would be greatly appreciated just to help more people find the show. And if you're watching on YouTube, hit all the buttons, like, subscribe, notification bell, leave us a comment. Let us know what you think of the show. Again, just helps it get it out to more people, help them have success in real estate as well. And without further ado, let's jump into episode 178 with Mark Loeffler. Hello and welcome to the Andrew Hines Real Estate Investing Podcast. I got Mark Loeffler back here. He's on the show a couple of times already.
This is the third time, yep.
Yeah, third time. And
third time's a charm, you know.
Yeah, exactly. So Mark, you're a busy guy. We obviously chat fairly often. We've done a bunch on your YouTube channel. I'm sure we're going to cover some of those topics today. You know, what's going on, market. Yep. And, let's start with kind of your background for those who aren't familiar with you and just what you've been up to lately.
Sure, yeah. So I've been a real estate investor now for, I think it's almost 20 years. It's a long time.
It's been a while.
It's been a while. I started out doing duplexes and smaller stuff in Newmarket, Cornwall, Hamilton, Toronto areas. And I've just graduated into buying bigger buildings at some point along that line, probably 15 years ago, yeah. I got my real estate license. And I started helping people buy investment properties. What I've been up to lately, I basically am trying to buy all of Edmonton right now. And I actually just got my real estate license out in Alberta as well.
Serious?
Yep.
See, what was that like as a process?
Actually, it was pretty simple. I got my whatever from like transaction history from OREA or whoever, Rico, and they sent it off to the Alberta place. And it actually took me longer to get my English proficiency stuff from the Toronto District School Board than it did to get that stuff sent over.
Okay.
Yeah.
That's what they need? They need your high school?
Well, they like, university, high school, just something that shows you can, you're proficient in English. And I'm like, well, we're talking right now. I'm like, isn't that good enough?
Doesn't that work? Yeah.
No.
Okay, so what was the logic for getting your license there? Just being able to see transactions?
See transactions, and the fact that like I've probably referred 20 to 30 people out to Alberta in the last 6 months.
Yeah.
I honestly just, I know the market there very well, especially in the multi thing, because I've bought a whole bunch.
Yeah.
So
I might as well help people.
I might as well help people. I have people that are there that are going to do the showings and, do more of things. So I basically partnered with somebody out there to get people through and do all that type of stuff. But I'll just run my investors through that, my buyers, right? So
that's really cool. I didn't know you were working on that. And then you've got your Canmore place that you bought and then sold.
So it closes. It was supposed to close Monday. It closed today.
Mm-hmm. So somebody made you an offer. You had this place for a year and a half or something?
10 days or 10 months.
10 months you had it before the offer came?
So, well, I mean, it closed in 2 weeks, but yeah. So I basically bought it July of last year, closed July of last year, and it closed again. May.
And you're up
today, the 18th. So
up like 600 grand or something? 500 grand
after fees and whatever.
Not bad for a year's not really work.
10 months. and the beauty part is like I look like a genius because I took out money from the stock market.
Yeah.
10 months ago when the market was up, and now the market's totally gone to crap.
Yeah.
So I made 100% on that money, or maybe a little bit more, and and the market's gone to crap.
Yeah. So Yeah, tell me about that, because that's part of what you're doing. Obviously, you've been doing options trading for a while, and market's a little bit different right now.
So I'm not doing as much options trading right now. So I have basically two different types of accounts. I
Okay.
have like a long-term hold one that I'll sell calls in.
Okay.
But I bought like Suncor at $15.
Okay.
And then I have a target price on it at $50. So I just sell calls at $50. Obviously they have a dividend.
Mm-hmm.
So I actually drip the stock. So I do a dividend reinvestment program. I have that. I have Enbridge. I started when everything crashed, I started buying stuff like AMD and Intel.
Yeah.
In that one, and then
So are these all covered calls? Like you have
a covered call. So I buy the stock and I sell calls.
Yeah. So you're happy if somebody wants to take you up on it, or you'll just keep it and keep taking premiums.
100%. And I just keep taking the income, and then I drip it. So I add stock. And
so give me a context, like an example. So you said Suncor. What's it trading at right now?
45 to 46.
And
48.
you'd sell a call at 50.
Yeah.
Okay. And you're not expecting anyone to take you up on that, but if they do, great.
Yeah, because my cost basis is $15. Right?
Okay, so you're way up at that point.
Oh, I'm way up.
Yeah, but as far as like a premium, like how are you selling a call for 60 days, 90 days?
6 weeks ish. So 45 days.
45 days. Yeah. And what kind of premium are you making?
1 to 2%. Depending on what the stock's doing.
On the stock's value.
If there's earnings and whatever, and
That's nice to just keep making money off of something you own.
Well, and I'm getting like my dividend on it's like 7%.
Oh, nice. Oh, on your original purchase price? That's all right. So,
maybe even more. I don't even know.
Yeah. Obviously, with oil prices going up, I'm sure that has an effect there.
It has a huge effect, but yeah.
Yeah, it's a good time to be invested in that kind of thing, I guess.
Yeah.
Because new mining and stuff is very restricted right now.
Well, it's so funny. I'm talking to my buddy up in Fort Mac, and he's like, the Suncor warehouse is hiring $60 an hour to start. No experience.
Wow.
He's a truck driver up there, and somebody offered him $11,000 for 2 weeks worth of work.
Wow. That's wild.
And he turned him down.
Wow. The price, prices are just going so insane on that side of things. So, okay, so that's part of what you're doing. Obviously, you've got the stuff out there in Canmore. You're going to buy another one, right?
So, it's funny how things work. So last week I said, nah, you know what? I tried to negotiate the price. It came down a little bit, not enough. Mm-hmm. And I basically said, okay, I don't want it then. They're like, we have a backup. And I'm like, okay, go sell it to the backup.
Yeah.
I get a call yesterday. Oh, the backup didn't come through. Maybe they'll sell it to you now. I'm like, well, maybe my price is lower now. I don't know. Like, we'll just keep chasing it down, right?
Yeah.
It's funny because he's a builder and it's it'll be fully built on June 15th. So he wants to sell it. And I'm like, well, obviously mortgages have changed.
Yeah.
Like my cost is going up like this. Like there's a whole bunch of factors, right? So I need to adjust, and I don't know that, that market is going to be as strong right now, right? Like
it's tough. Like I know we were trying to predict all this stuff for so long, and it's the two impossible situations. Like they raise interest rates and break the economy, or they let inflation ride and that wrecks the economy in other ways. And so what's the pickle? That is the pickle, and what do they do about it?
Yeah. And it's so funny, right? Because I was seriously, I don't know if I was losing sleep over this decision, but I was on the fence. Like I'm like, do I just buy it? Because it's great for the kids, it's great for whatever. Yeah. And I was like, there'll be other stuff. Mm-hmm. There's always other stuff. Like it's like streetcars, right? Or buses. Another one will come along soon. Yeah. And it
might just work out for you.
Honestly, I just had that gut feeling, right? I'm just like, it seems like too much, right?
Mm-hmm. So everyone's kind of in that position right now. Like, I feel like a lot of people are like with just decisions to buy it all around.
Wow, like we say that, but I just bought a 21 unit out in Edmonton, closed June 3rd. We're putting an offer on a 90 unit out there, but I'm definitely using this as negotiation, right? Yeah,
like is that market wasn't really up that much to begin with.
No, it's up like maybe 15% year over year right now.
Yeah.
But like it hadn't gone up from 2014 till now. It's been either down or stagnant.
Yeah. So that's like kind of the market you would want to invest in, like the ones that haven't gone up until recently, because they have less to fall.
less to fall, and they're
Hypothetically.
Also, like, I think oil prices are going to sustain
yeah.
here for at least the next 6 months.
Mm-hmm.
So that'll do well, and that'll start to come back, which will pull back inflation. And I kind of think Canada's headed for a recession.
Oh, I think that's like an undebatable.
Yeah, and I think that oil will stay around $70 a barrel minimum, $60 to $70 a barrel, which is great for Alberta.
Mm-hmm.
So I think that obviously recession comes, they lower interest rates in the rest of Canada while Alberta's on fire. This happened last time, right?
Well, we were basically we were 6%. I checked it like 2 months ago. I haven't updated my knowledge here, but we were like 6 or 7% GDP growth nominal.
Yeah.
And our inflation rate's right around the same.
Yeah.
So you could say that we were, as far as real growth goes, roughly stagnant. Now you increase interest rates.
Yeah.
So I think it's undebatable that we go into recession at this point.
I think they have to if they want to get inflation down.
Control it, right?
If they want to get the demand side of the supply chain problem down.
Right, and right now I think everybody's it's kind of like the beginning of lockdown. Like just everybody's looking around wondering what to do.
Well, it's so funny. Like I talked to so many people about stuff like this, right? It's like I have people who have cottages are renting them and they're saying that's slower. I know, like, on my lake, one didn't sell on offer day type thing. Like, that's happening. Obviously, we still sell, like, we listed 7 properties last week. We sold them all.
Yeah.
So stuff is still moving. The market's still, as long as you have realistic expectations. I think one of the funniest things, so like one conversation I had today, this guy is going to sell his Oakville property. Him and his girlfriend have retired. Mm-hmm. And they have a couple Airbnbs around. He has a lot of long-term rentals. And basically, he's going to go and buy like an Airbnb in maybe Canmore and Arizona, and live. Mm-hmm. He has his place that he Airbnbs in Hamilton, so he'll just stay there when he's here. Canmore when he's in like Arizona.
Yeah,
that's brilliant, right? Like it's not to have kids, I guess.
Yes, I don't know that flexibility these days.
Yes.
Yeah. It's so what are you, like, you're obviously very finger on the pulse with this stuff. Like, I know you have a lot of conversations about it. I mean, what is your take? Like, I know it's so hard to predict, and we do this a lot. We talk about this, but what is your take about the next 6 months? I think recession, like you do. What's the response? Do they say, well, it's just what you need to do?
So I see, like in real estate terms, I see that I think prices are going to flatten out from here.
Flatten or fall?
Flatten. Okay. I think we're going to, I think, like what happened, obviously, like January, we talked about 15% increase, unsustainable.
Yeah.
Then February came, it was another 10% increase.
Yeah.
Right. Because they all knew these rate increases were coming. So it's like, oh, we got to get in. And there was nothing available. All these prices went up. So we're still up 5%.
For the year.
From December to
From
now.
December, yeah. Okay.
So if this was a normal year, I'd be sitting here talking, hey, real estate is great. We're up 5%. Yeah. Whereas we're actually, obviously we're down, 15, 20% from the peak.
Yeah.
But if it was a normal year where we didn't have this stupidity in January, February.
Yeah.
As for the recession, I think it's going to be mild. I don't think they're going to go deep. Like, it's funny, like we're at the Western Apartment Association or whatever, the conference out west, and Todd Hirsch is in there speaking. He thinks over the next year and a half we're going to see 200 basis point increase. Yeah,
I've heard that a couple of times being thrown around, and that would be, I mean, from a Canadian perspective, that's like almost equivalent to what they did in the 80s. I know it's nowhere near like teens, but the effect based on how much debt people have, I would think it would almost have a similar effect in controlling inflation anyway.
Yeah, I don't know that we're going to get that high. I think it's obviously some of it is transitory, and it's slowly improving.
But we can't unprint that money. That's the real problem. I mean, can you really control it, or do you have to let it play out? Because if they stop printing money at the rate they did, then eventually all those new dollars sort of play out, and the inflation effect will slow, right?
So, I mean, I think they've stopped in the printing.
The major printing press?
They stopped quantitative easing, right? Yeah. So we saw that in March where the bond rate went from, 1.2 to 2.6.
Yeah.
Basically not overnight, but like within 2 weeks, which is unheard of, right? That's why all the long-term mortgage rates went up, everything went up, right? Yeah. Like it's, like just the chart is unbelievable when you look at that stuff.
Yeah.
Like, I mean, obviously, I love to geek out on that stuff, right?
That's why we bring you here, Mark.
Yeah. So I don't, for me, I don't think the bank rate plays as much into it as obviously the long-term bond rates right now.
Mm-hmm.
And I don't think the long-term bond rates are going to move all that much right now. Like, I think we've had that jump. I think we're going to flatten out.
Yeah, and I guess that if they see like a major recession signals, 1 quarter later, do they start making a decision to maybe not continue increasing? Do they back the interest rates back down?
I think the big news story isn't the Bank of Canada increasing the overnight rate. I think the big story is
the bond rates.
The bond rates.
Yeah.
I think the quantitative easing is done.
Yeah.
They've stopped buying. I think they're maybe even selling into the market right now. Mm-hmm. And that's going to obviously be deflationary.
Okay.
And I think that's probably one of the biggest things. And I don't think if we go into a recession, I don't think they're going to start the quantitative easing again. I think that was like COVID, here's our hammer.
And what did it, and I did dig into this a little bit earlier on, but what did the Canadian version of quantitative easing look like? It was the government buying back its own bonds
100%.
At a premium?
Just at market.
At market?
But they got bond rates down to like 0.2. Mm-hmm. That's obviously why we were seeing fixed rates at like 1.
Yeah. So trying to drive the interest rates down. They stopped trying,
that's what
right?
It was.
And so now that they've stopped trying, and that was like, looking at that, it's kind of a futile effort because things weren't open, right? So you're driving things down. That money all just needs to go somewhere. You make money so cheap, right?
Yeah,
it went to real estate.
Went to real estate.
The one thing that was open for business, right? I mean, maybe not the one thing, but one of the major
cars,
things. Food, groceries.
No, but people bought cars obviously with it. People bought I just sold my Porsche for 20 grand more than I paid for it.
You're always wheeling and dealing, man.
Well, here's the thing, like those things, like the Porsche and like the condo. Like I liked the condo, but I didn't love it, right? And so if I can trade it for something I like more, and again make more money, and the Porsche, the same thing. Like it was I liked it. Yeah. I didn't like it. I didn't love it. I was kind of bored with it.
Gotcha.
So it's like, why keep this expensive toy around if I'm not gonna love it? And I go buy. I got to actually. It's funny. Somebody listed a 71 Datsun is what I really want. Okay. And I'm gonna retro mod it.
Okay.
So I contact the guy and he's like, "Oh, Mark, man, I love your YouTube channels. Come by anytime and look." I'm like, "Okay, this is good."
Yeah, that's really good.
Yeah. I don't know if I get a better deal.
Get some goodwill, some trust in that transaction.
Yeah.
You're the guy on YouTube.
Yeah.
Yeah. So how is that going since you brought it up, the channel?
YouTube's good. It's pretty steady. I'm not growing like last year at this time. I think last year at this time is when I made the decision to go down from 3 videos to 2.
Okay.
And that has just kind of limited the growth. I'm at 5,800 subscribers. And I'm constantly
You got a good community there, I think, of people that are on your stuff.
I have people who watch consistently and, and I made the decision, I don't want to be have 70,000, 80,000. I don't that's fine if that happens. Yeah. And I think everyone should watch, but if they don't, that's fine too. And I just kind of do it for myself because I love diving into the numbers. Yeah. I just love geeking out on that stuff and it just gives me a platform.
If you're going to do that stuff anyway, why not record it and let somebody edit it and post it?
That's right.
Yeah. That's I'm trying to think of that more. I crunch. I'm very much a back of the envelopes number kind of guy. I'm I should start recording reels of this. Here's the deal I'm looking at. Here's my breakdown of the numbers.
Yeah.
And it'd just be a way of kind of creating some content around what I would be doing anyway.
Well, and that's it, right? And that's all it was I'm doing this anyway. So let's I'm analyzing properties. I'm doing whatever. I'm creating plans. I'm so why not just record it and
Yeah, exactly. And, thinking out loud with these economics discussions, everybody wants to know. We're all trying to figure it out, rationalize our way through it.
I mean, I think 2% of the population wants to know, but...
I meant the audience here.
Oh, our
we all want to know. Yeah, you're right. The other part, they're probably just tuning it out. It's interesting how the tone, and probably by the time this airs, it'll have changed even more as to... the tone people have about the outlook. And I do see that uncertainty, a lot of people just pausing. That's what makes me, I think from a fundamental standpoint, we know it can't stay down real estate can't, because
Wow.
how do you build more houses? It's still so expensive to build.
Well, and you look at Toronto, they just like increased their developments thing 41%, 49% or whatever it was. Like it's unreal. Like that's just going to increase the cost of housing.
Their development charge.
Yeah, they increased the development charges 49%. Like it's like obviously you're not paying attention to what Dougie's trying to do there, but it's okay.
This is what I mean when I like the nonsensical nature of government. Like we need affordable housing for Canadians, and like everything they're doing just makes it more expensive.
Well, so you say Canadians, right? Like this is a very Ontario thing to do now that I've traveled around the country more. That we figure that everyone is having this issue because Ontario. It's mainly Ontario because it's all the not in my backyard, right? All the NIMBYism, it's all the, it's our rights, it's whatever, right? Where you go to Alberta, and it's like, we bought a 40 unit property out there. It's 30,000 square foot of floor plate. We can probably put about 120 units. We have to change zoning. Right now we can put about 80 units on 4-story, but we can get 6-story there.
So you're gonna have to build it?
Yeah.
Okay.
But like to get the zoning change will take 2-3 months.
That's it?
And then like I could have shovels in the ground probably within, 8-9 months there.
That's pretty incredible.
Yeah. Like I could be in and done in a year.
Is that an Edmonton specific thing? Like
it's Alberta.
Okay.
Yeah.
Because I've heard somebody in Calgary say that it was a lot more lethargic there.
So it's Calgary is obviously harder than Edmonton. It's funny because I was talking to a bunch of the developers and they're like, why would I build stuff in Edmonton right now when I can build in Calgary? They have higher rents. They have. I'm like, oh, that makes sense, right? It's the same cost to build. Yeah. Just the land's a little bit more. But if you're getting 120 units, your cost basis isn't that much more.
Right. So you're obviously focused in Edmonton. Is that where you just were? You were there this past week?
Yep. Yeah. I flew back this morning. Got in at 11:30.
Oh, okay. Just had to make it here in time.
Yeah, that's right.
Okay. So you obviously bearing the cold there. Is it still cold?
It was nice.
It's nice.
The same weather as today. Like just,
Okay. Starting to warm up.
23 degrees.
We're kind of going through a cold snap here right now, so it's just like colder, right, than it was. It was so hot here on the weekend.
It was nice, yeah.
Yeah. What do your numbers look like out there as far as like price per door that you're buying?
Yeah. So, I mean, we've bought anywhere from 85,000 a door till 100 to 115 a door. We try to keep it under $100,000 a door. The 90 unit, we're trying to negotiate it right around 90 to 92,000 a door.
Yeah.
So I don't know what that works out to in purchase price, but it's probably
90. So 90, and then you want to do
0.9 million. Yeah.
Oops. Let's do these numbers. That would be good, actually.
So like I can share with you, we've completed 2 projects out there. So Don Campbell's building that we bought and did all that. So we bought that at 1335 for 15 units, so about 90 a door. 89.
Didn't he agree to go on your show or something?
I know, and I just haven't followed up with him. And now he's on his vacation and whatever. I don't want to bother him.
Yeah.
We'll do it at some point. I actually wanted to do it live.
Yeah. Oh, do it like a YouTube live on it?
Yeah, no, or just like actually go there and
do it face to face.
Face to face, right?
Yeah.
So it might end up being Zoom. But.
So if you do 90 at 92, that's 8.2 million, 8.3 ish. What kind of cap rate would that be?
I don't know. I haven't actually ran the numbers yet.
Yeah.
I'm probably going to guess it's in the 6s.
Okay, and then with room to move rents up or not really?
100% room to move rents up. So it's very similar to the 15 unit. We took the rents that we were getting for like $925 for a 2-bedroom. We're getting $1375 right now.
And there's no rent control, right?
No rent control.
So you just tell the tenants, how much notice do you have to give them? Like 3 months or something?
60 or 90 days.
So you just say, hey, your rent was $900, now it's going to be $1350. Like, let us know if you're leaving.
So we did that on one of the buildings and nobody left. And we're like, that's not good. Because we want to go in and renovate and fix a bunch of problems and do a bunch of different
But if people
things.
just want to pay an extra $400, then
I get that. Like it's I mean, I don't have to do anything, and you want to pay extra. Like it makes sense.
That immediately improves your value, and you didn't have to do anything.
Exactly. So I mean, we'll see on this one. I don't think it's in as great an area as the other ones, but it is up and coming. It's right by transit. So.
Yeah. So before this, what's the biggest number of units you've done in there?
40.
40. Okay. And do you have a management company, or do you have per property like site supers or combination?
So we have a building manager across all our buildings. We have a management company that we pay out there as well.
Okay, so you've hired a guy that just goes and manages your stuff. Okay, and then management company wise,
the property manager hired them.
Okay, so you're carrying the cost of it, obviously.
Yep.
Is that included in their percentage rate?
No,
that's not on top.
Yeah.
Okay, let's go through like a hypothetical. So the 90 some odd unit.
90 units.
90 unit. Okay, what's the average rent you figure there now?
Call it 800.
800. All right, so that's $72,000 a month in rent. That's okay.
Yeah.
So about $864 per year. Do you know, I guess so we could just do like an approximate, like your total operating expenses are going to be what, like 30, 35%?
About 40.
40% because your rents are low right now?
Yeah.
Yeah, so we'll say...
I mean, I probably have it on my phone. Want me to look at it?
Yeah. So if your expenses are 40, your operating income is going to be 60%. So let's see here. And then, the value we said was...
I use an 8% vacancy out there too.
Oh, okay. Well, we'll add that in because...
So
is that basically what you should expect, an 8%? Or is that a conservative estimate?
It's very conservative. I think 5% right now is CMHC.
Yeah.
But I like to be conservative. So.
No, I think that's smart.
So basically, let's call it 50%.
Sure.
Yeah.
Sure. Yeah. So I've got this coming in at a 5.7 cap.
Yeah.
Right. So, but immediately you're saying you could pretty much go in and jack the rents up.
Like as is condition, like people are going to obviously leave, which is fine.
Yeah.
But we need to renovate the units, and we're renovating to the tune of about $30,000 to $35,000 per unit.
30 to 35. So across the building, do you think that you will actually spend that across 90 units?
Oh yeah, 100%.
Okay, so this one needs it then.
Yeah, like so. Basically, it's a condo deconversion. It used to be a condo, so they've obviously taken out the condo board and done whatever, and
Okay, so if we were going to add on 30,000 times 90, that puts you up to almost 11 million you're in.
Yep. And
then what would you be renting for per unit at that point?
I think average you're probably going to be like, call it $1,275.
So 1275. So that would bring your gross rent up to about $115 a month, $115,000. That brings your cap closer to 6.79, assuming that you still keep a 40% operating expense, but you won't. Like then it'll go down, right? So you'd be like down. 35.
And then I'll run a lower vacancy as well.
Lower vacancy as well. You'll be like closer to 5.
I run a 5.
I run a 5. So that brings your cap rate up to 7.74.
Yeah.
And so you'd be in for 10.98, but probably worth more. Because what are they going to value it at? Like an appraiser out there, are they going to?
I'll probably get 170 to 190 a door. So let's just call it 170. Like that, our minimum refi that we've done is 170 a door right now.
Really? Okay. Yeah. So you're like a 1.5 valuation, in for 1.1, cash flowing. Well, let's see. Like
you're talking about $15 million valuation.
Sorry, 15. Did I say 1.5?
You did.
Yeah, 1.5.
You forgot a zero.
1.5 out of zero. Yeah. So carry the decimal.
The decimal. Yeah.
So 15 million, 0.3. So 75% loan to value, you think?
95.
You getting CMHC?
CMHC, MLI Select, yeah.
And so how does that work? Is that if you're under market rents?
So affordable housing, basically my rents have to be under $1,640 per unit.
And that's just national. So if you're
No. It's market by market specific.
So when you say you're $1,275, that is an affordable rent. Like you've said it that way.
No, that's just actually market
That's just
rents.
what it will get, but you'll get higher.
Yeah.
Okay, so 95%, what amortization?
50.
50?
Yeah.
And what interest rate you figure?
Right now it's 4%. It's actually under, but I mean, you're going to call it 5%, right? Like it doesn't matter.
Okay, so that'd be $23,000 of cash flow, almost 24 a month.
Yeah.
That's insane numbers. I mean, what are in your estimation, like what are the biggest risks for a project like this one?
Biggest risk in Edmonton in general is the fact that people can build, right? People can like, oh, there's demand. Let's turn on the taps and start building.
Yeah.
And they can build them quickly and they can put them out. I think we're in a unique advantage of the price and how we work things, just because if somebody wants a nice unit, the newer units are going for $2,000. Whereas our units are going for, let's call it $1,400 for a 2-bedroom.
Yeah.
So if they want that style of finish, but they don't want to pay $2,000, then they come to our building. And there's a whole bunch of new.
So you're going to have nice finishes at that rate.
Oh, like we're condo, where we take down walls. So we're open concept. We have an island. It's all stone countertop, laundry in each unit. We do all the bathrooms. There's dishwashers.
Yeah, the laundry in units is such a big upgrade.
It's so huge. Like people, I mean, I don't know. I want to create something I'd live in, right?
Yeah.
And I definitely need laundry. I don't want to walk downstairs and put the quarters in
that's
or whatever.
horrible. To me, like that would be a huge deal breaker. I would think there's going to be a huge tenant base that just wouldn't even consider your building based on that. So the second you add it in, now you're going to have to add plumbing. Are you breaking up any floors to do that, or how are you doing that?
It's all wood construction.
Yeah.
So typically we obviously don't need to. We open up the walls and fix things. And
so you'll have plumbing in a wall you can just tap into.
Yeah, all the lines are going straight up. We tap into existing plumbing and.
Okay, so there's a stack going up and you just tap right into it. Yeah. Okay.
Sometimes we had to like either fix the stack or do something. But.
And are you like how much of that work needs a permit out there?
That's a great question for my contractor.
You'll find out. He'll find out. They just take care of it. Yeah. Yeah, I'm just curious, like if they're very like red tape out there, or if they're
they get permits for everything.
Sure.
Like we took down, we had to put LVLs in, like load bearing walls and stuff like that. So they got permits there. They got electrical, plumbing permits.
Okay. Wow, those numbers look amazing. What would you say is like the biggest? I mean, obviously so risk-wise, you've pointed out that they can create supply quite easily out there. There's lots of land.
But I think I have a lot of, like, with that 50-year amortization, like I have a lot of room.
Yeah, because if you look at your amortization table, your first payment, for instance, your interest amount is $43,000. Your principal is $3,900.
Well, it's so funny. Like I had an argument, like our discussion with he does our firsts on our buys and stuff.
Yeah.
And he's like, well, I want a shorter amortization because I want to pay off the mortgage. And I'm like, I'll take interest only.
Yeah.
Just give me interest only. I'm happy.
Interest
with that.
only at 5% would be great.
Yeah.
I mean, because you think about it, like obviously inflation's higher than 5, so you're actually getting paid to borrow that money.
Yeah. Will it be in 2 years though?
Tough to say.
But and I told him I don't care.
Yeah.
Like I got such wiggle room, and I don't think we'll get a 5%. I think it'll probably be closer to 4 or less by the time we actually pull the MLI Select program, because we'll be, 90 units. I'm probably gonna guess we're a year and a half in renovations, right?
Yeah. So in the interim, how are you funding that in the interim until you get to the point of refi?
So we get 85% of the purchase price and 85% of the construction costs.
Okay. And are you doing that with like a credit union out there?
No, it's through our ICI.
Okay, ICI.
Yeah. And they have different people they work with, different mix and stuff like that. It's funny, like Equitable there'll be a BA lending partnership or whatever.
Okay.
So Equitable might come in, or Laurentian might come in on like the side, like
interesting,
to lower the cost. But we'll probably be on that one, probably around 5.5% to 6%.
Okay.
Interest only to start off with, and
so they'll do 85% of cost.
85% of cost.
Okay, and then you get all the way to the end. You're only paying on what you draw.
Yep.
Yeah, that's good. I just had a conversation with the Florida lender, and because of my experience and newness to the U.S., they said go Dutch, which they translated to mean that they wanted to charge me on the whole amount.
Yeah.
Like I don't like that very much.
No.
that drastically changes the
100%,
the numbers. But I don't know. I may have to take my medicine on that for like 1 or 2, just to show the track record with it. But damn, like these are numbers that are quite significant for a single project. Now, of course, you have to line up your contractors That's a big building. You probably wouldn't have done that as your first out there.
No, we did a 15 unit as our first.
Yeah, just to sort of build up your trades. Do you see like the manpower being a challenge here?
We have grid trades now, and like by the time we buy this one, there'll be other projects that are coming off. Like we have 5 projects on the go out there right now, but like 2 are finishing up within the next month, and then it's just continuous.
And how does your contractor price you? Do you get a job pricing, or are they fairly transparent? And then
Cost plus.
So cost plus a set fee?
Yeah.
Okay, not a percentage of cost?
No.
Okay. Yeah, that probably makes the most sense. So how open book are they, and like, what kind of checks do you have on what they're doing?
So, they send us everything. Like,
so you see all the invoices, you pay them direct, or they pay them
they pay them.
And then they just send you a copy?
Yep.
Okay, and then you pay them. And is it like deposit heavy up front, or do you just do milestones as you go?
Milestones as we go.
Okay, so you got a good relationship with them already.
Yeah.
How are you with that? Do you pay deposits or no?
Yeah, we did up front, right?
Like when you first start with these?
When we first started, you got to, right? Like it's...
Or you got to work something else out. I had a new contractor that wanted to deposit for our campground, and I'm like, what do you need it for? Oh, the materials. Okay, I'll buy the materials. Yeah. There you go. Yeah. But yeah, you gotta put money out, of course.
And just being that far away, I was like, I could buy the materials, but it's just easier to have you do it. So let's just get going.
Oh, of course. Yeah, and I think once you develop, I think it goes 2 ways. Like there's going to be trust built on both sides. Once you've worked together a few times, then it's like, okay, you're good. Like let's just rock and roll.
Yeah, and our contractor has a crush on my partner Sharon, so.
Oh yeah.
I'm pretty sure. Yeah.
Yeah, so that helps. You just have to bring Sharon out, and then. Yeah. So yeah, Sharon is she's doing this stuff with you. I know you're realtor partners together.
Yeah. So she's partners with me on Top Gun Real Estate Investment.
That's what you've called it. Okay.
Yeah. And
So that's everything you're doing out in Edmonton is all Top Gun?
Everything we're doing.
Okay. Now, are you doing anything left in like Hamilton? I guess you still have what you already had built.
So I still have 1 building in Hamilton.
Yeah.
I might be selling that, maybe, or I might be buying my partners out of it. I don't know.
Yeah.
But other than that, I'm still looking. So who knows what comes up or what comes down the pipeline right now.
Yeah.
I'm always looking though.
Yeah. It feels like I have a similar feeling, like if there's a great deal, sure. But I find Ontario just like, it doesn't seem like there's as obvious a deal. So of course that might be changing in the near future.
So my problem now with Ontario is just how long it takes to do anything. Mm-hmm. Like to get tenants out, to do this, to do that. Whereas in Alberta, it seems and just the team we have in Alberta is way better than anything I've ever had in Ontario.
Interesting. Is it just easier to find good people, you find?
We looked long and hard. So our property manager is cold out there. Like it's so funny. We bought 2 buildings off actually our lender, like the guy who does our mortgage brokering, and then he was going to sell us more, but he's like, oh, who's your new property management company? Like, oh, Greystone. Like, and he goes, are they good? And I go, okay, well, I'm going to tell you something, but you'll never sell me anything again. He's like, okay. I'm like, the building you sold us, we just walked in and raised rents $300 a unit. And he's like, what? I'm like, yeah. Like your manager hadn't been there for like 6 months or something. Like, and he told us that. Like, I wonder why he told us. And everything we got from him was a mess. And he's like, oh. So he went ahead and took 6 other buildings and gave it to our property manager. And now he's, oh, this is great. I don't have to do anything.
But now he's not going to sell you any more of his buildings.
Now he's not going to sell. But he's going to get us great financing on things, right? Like it's, and the thing is, and I said this to him, I go, I'd love to buy your buildings, but there's so much out there.
Yeah, like I was going to ask you, like what is the viability for people trying to get in now?
Well, it's so funny. Like today I got a 23 unit and a 16 unit, like as a package deal, like to look at. I got a 99 unit package deal that's being sold. I got the 90 unit I'm working on. There's tons of stuff out there. There's just so much opportunity.
So what areas, I'm going to pull up my Google Maps here. What areas of Edmonton do you like and what areas don't you like? Like, give me an area that I should look up.
So Queen Mary Park, that's where our first 2 buildings were.
Queen Mary Park, Edmonton. Okay. So this is a little, I guess it's like one major intersection, kind of square in the center of the city, like a borough of the city.
Yeah.
And kind of just northwest of downtown?
Just northwest of downtown, kind of close to schools.
Okay, and where is an area that, like, is all the surrounding boroughs, or are those all sort of like areas that you'd be okay with as well?
So I don't know Edmonton that well because it's all based on the numbered grid system.
Yeah.
And it confuses,
Yeah, the numbered streets, yeah.
It confuses the crap out of me.
Yeah.
But like Central McDougall is probably somewhere where I wouldn't go. So I don't know how close. I think it's not that far away from
Central McDougall. Yeah, let's look at that. Okay, so Central McDougall is like right next to it.
Yeah.
Okay, so you have to really be specific about your areas.
Yeah, but we're like right by Centennial Stadium. We just bought 3 properties, which is Cromdale, I think. It's Cromdale, maybe Cromdale area.
Cromdale, Edmonton.
Is that a thing?
That is like 2 more major neighborhoods over.
Yeah,
so
it's like they're all close to each other, and they're all close to downtown.
Yeah, you're kind of like following along the river almost, like a little.
Yeah,
so downtown's just north of the river, and you're just north of that.
Yeah, and there's like a LRT station there and everything, and
yeah. One time when my brother and my brother used to live in Edmonton. He lived down in the very south, and I don't know why we'd been out at the bar. This is like 15 years ago. We ran back at 2 a.m. from downtown to south. I don't know why we did that. We're kind of idiots, but I guess we've all been there.
Oh yeah.
Being idiots, that is.
Yeah.
Okay, so these neighborhoods are kind of hugging one specific area. Is there some specific reason that you were drawn to do that? Focus on that area? Was it purely that started with the numbers? It just happened to be there?
Price per door. Like the price per door, like on White Avenue, which is not that far away, but it's like the more trendy commercial area.
Yeah, that sounds familiar to me. So
yeah, that's probably where you were drinking and you ran from. And yeah, like it's like you're $130 a door to buy in there.
Okay.
And I'm just like, I don't know that with our model that the numbers are going to work. Like if I put 35 in, am I going to get, the lift from, whatever, 170 to 240 per door? I mean, we got 190 on our 15 unit there.
In these neighborhoods.
So
190. And you're buying, but you still would expect to buy around 100 there?
Yeah.
Or even under, hopefully?
So we just bought one at 85, 21 units for 185. I don't know what that would come out to. So.
Wow. Okay. So are there also other areas like, I mean, I think about these towns and there's probably a lot of like old density in these neighborhoods, right? You're gonna have those old apartment buildings. The further you get from downtown, the less of those you're gonna see probably.
Yeah.
So that's probably one of the reasons that you're finding the deals there.
Yes.
Because that's where they were all built 50 years, 60 years ago, right?
Yeah.
Okay. Are there other neighborhoods that have come up, in the south or east, or it's usually around downtown?
West Edmonton, there's been a bunch I've looked at. South, north, I've looked everywhere. It's just, this is where I found the numbers work the best for how we want to do it. Because we want to, the other problem is they come in and do these like cheap $10,000, $15,000 renos, and instead of 95 a door, they want me to pay 115.
Okay.
And for me, that model doesn't work in our model.
No,
because I don't want to rip out their $15,000 reno. I'd rather than not do anything.
Not have done
95
anything.
a door, right? So
they're still coming up. Like, is there a capacity or like a volume that you're looking to do, and then when you kind of get past that, you're good? Like, if you do this 90 building, are you going to buy another 90 if it comes on, comes to your desk?
If the deals work, I just buy them.
Yeah. So anything 90 a door, you're pretty much in.
Pretty well. Like, if as long as it's not in Central McDougall.
Okay.
Like it's,
So, but in that general area, those are kind of ideal for you.
Yeah.
Okay.
Like they're B- neighborhoods. And we're putting A- like product in those neighborhoods, right? So we're better than our neighbors.
Yeah, and that's kind of what you want to be, right?
Yeah, and we're not as good as the new stuff.
Yeah, but you're a value play.
We're definitely a value play. So
I think that's a great place to be with what's coming, like
100%.
People who were A tenants might just become B tenants because they want to save some money.
Yeah, and the funniest thing is that we're talking to some big money guys out there, and they're like, you guys are like nailing this sweet spot. And I'm like, you say that now, but like a year ago when we said we were going to do this, my realtor said you're nuts. Everyone said we were nuts. And I was like, okay, well, we'll see, right? It's 15 units. If it blows up in our face, I pay the investors out of my own money, whatever, and we'll move on, right?
But it worked well, right? So
and it worked really
so
well.
no one was really doing that sweet spot there. So the
nobody's
older
really
building,
doing it
but
now.
done up nice.
Yeah.
And I think a lot of us can think of those type of buildings around here too, where like you still got an old building. It's obviously old.
Yeah, but we fixed the plumbing, we fixed the electrical,
So
we
it's got
fixed
no
the
issues.
roof, the windows. Like a lot of them, we're taking down trees out front. We're putting like concrete side things
Okay.
in.
So making it nice.
Well, fixing the problems, right? Like if there's water like leaking because of grading. Okay, let's just put concrete in because we're going to own this for a fair amount of time. So let's make it proper.
So what is the outlook? Like how long you figure you'll keep it?
Goal right now is 5 to 7 years, but who knows?
Yeah.
Right. Like once you put a 50-year AM on, it's like, oh,
Why sell?
This in cash flows, and as long as everything works, then why would we sell?
I mean, the only thing I've heard with Edmonton is the rents can be volatile.
Yes, they can.
So you could, maybe you're getting 14 or
And maybe it goes to 12.
Maybe it goes to 12, then maybe it goes to 10 or 1,000. But I think that those numbers, you have enough buffer there that you could probably take a bit of a hit with.
I think so. And I think we're going to have more stickiness just because of the quality of product.
Yeah, and I'm a big believer in that. Like just be better than your competition, which you are in that B category, right? So that's again, like I am just big on that kind of sort of more recession-proof real estate. I think that's really smart. And then you're obviously in an area that's kind of recession-proof to begin with. Not that it's not volatile with oil, because it is.
Yeah.
But it's just so cheap. Like there's always going to be people that'll live in Edmonton because it's cheap.
100%. And I think that the floodgates are going to open for immigration, and I think a lot of people are going to go out there.
Yeah, just for the opportunity.
Just for the opportunity.
What's new and starting? Like, is tech becoming a big thing in Edmonton?
Tech is starting to become. It's not going to become Silicon Valley, but there's a couple tech startups out there in Edmonton and Calgary. But it's just the cost of living, right?
Yeah.
It's the cost of living plus it's, you get the cost of living benefit, and you can drive an hour and a half and be in the mountains.
That is cool.
It's so cool, right? So like they're more outdoorsy. Like
how far from like closest ski hills or mountains?
They're Jasper, right?
Jasper's the closest skiing?
Jasper's the closest.
And that'd be like what, 2 hours?
Hour and a half, 2 hours.
Yeah.
Like I drive from Canmore to there in 4 hours.
Canmore to Edmonton?
Yeah. And one of the guys was like, I do that in 2.5. I'm like, good for you.
I've done that. I did that drive as a kid. We drove from Edmonton all the way around and through to Calgary, like just through all those towns. I remember it being a long way to get to like Banff from Edmonton.
Yeah, it's 4 hours.
Yeah. But nice drive.
It's a beautiful, it's actually really boring. Like from Calgary to Edmonton is really boring. Like you stop in Red Deer for a tea and maybe gas or whatever.
There's Sylvan Lake along the way there. If it's
you have like if you're getting off the highway for sure, it's like lots of stuff to do and beautiful. And then
no, but it is a boring drive. Otherwise, I've done that one too.
It's like this is slowly uphill on the way to Calgary and slowly downhill.
It's getting a little colder the whole way, and it's straight north, right? So Edmonton's quite a bit cooler than Calgary is.
100%, yeah.
But also cooler because it's further from the mountains. Doesn't get that Chinook effect and stuff. But again, none of that matters as an investor. You're not living there.
Exactly.
Just get your cash flow there.
Yep.
So if somebody wanted to get started in Edmonton, being that it's a new market, like you're a seasoned investor, what are some of the things that you do to make sure that you're not making decisions that are, you're going to work with the wrong people, that type of thing?
I mean, so when we started out there, we got referrals for, 15 contractors, 20 contractors. We interviewed, 10, 15 property managers. We selected a property manager, and then they fired us, and that's how we found our new one. But we just kept asking, who do you know? Who do you know? Who do you know? Who do you know?
Yeah. Just everyone you're talking to. Yeah.
And I put it out there on the Facebook. I put it out there on the Rain group. I put it out, set it on my YouTube channel. Hey, who do you guys know? Comment down below.
Yeah.
Send me a DM. Do whatever, right? So
super helpful. Like there's nothing better than that. Like just get people in your network to refer you. Referrals are everything. Yeah. I don't like going in cold with people, and you get a lot more treatment from the contractors when you're referred to. Yeah. So it works on both sides. Okay, Mark, where should people find you?
Come to my YouTube channel, Mark Loeffler Experience, or Instagram, Living the Dream 40. Okay. Or just look up Mark Loeffler, and I'm sure you'll find me on Google.
I'll put those links in. I'll make sure people can find you. Okay, any parting words of wisdom? Today's climate, what's going on?
Honestly, be greedy when others are fearful, right? Yeah. Use this to your advantage. I think this is, even though we go into a recession, I don't think long-term prices are going to stay down. And if you can pick up good deals, now's the time to do it. And It doesn't hurt to be a little bit in cash right now, I don't think, even though inflation's that high.
Yeah.
I'm looking at some shorter term cash stuff right now, just to take advantage of some opportunities as they come up.
Yeah, I mean, that's an important lesson, and I've been trying to think about this. Like, how do I be greedy when others are fearful right now? Like, what is the play? And I was thinking, yeah, cash is great, but you also don't want to leave it when the inflation's here.
Yeah.
Like, you want to be able to take advantage of those opportunities when they come, because credit dries up when values are down too. So, I mean, I don't know if people have these big HELOCs, if they should worry that maybe some of that gets locked down. I don't know.
I don't think that's going to happen.
That's probably not. Hopefully not. But this is probably a good time to make sure you have access to that, so that if there is a great opportunity, you can just start snapping stuff up.
That's right.
Yeah, rather than cry over your existing stuff going down, let's go buy a bunch more and cost average our way to profitability.
For sure.
So, anyways, okay, Mark, always great talking to you. Appreciate you coming over.
All right.
It's usually me going the other way.
Yeah, for sure. all 10 minutes down the road.
Yeah, exactly. All right, well, we'll catch up again soon.
All right, thanks, bud.
Thanks for tuning in to today's episode. Please make sure to share this episode far and wide. Help it help more people. I really appreciate you tuning in. I'll see you on the next one.